Hey everyone, this very special episode of Talking Success with none other than Mr. Brett King is brought to you by our dear friends at Rely Comply, who run AML compliance solutions for some of the largest financial services institutions and fintechs on the continent. So if you're looking at any AML solutions moving into the new year, then give Rely Comply a call. You're in safe hands, really good business, and we thank them from the bottom of our hearts for sponsoring this episode. Thank you very much. Hey, good afternoon, everyone, and welcome back to another episode of Talking Success. This is, I know I say this every week, but this is one I've really been looking forward to. I'm joined. Now, I don't usually make notes when I come onto these podcasts. I usually try and keep these as fluid as possible. But for this particular guest, I did have to make some notes. So obviously, if you're watching on YouTube, you can kind of see his face. But for those of you who are listening audio-wise, I'm going to give you a bit of a snapshot. So this individual founded a fintech business, which was the world's first mobile downloadable bank in 2010. He hosts the world's first and number one ranked radio show on fintech called Breaking Banks, over 10 million downloads in 180 countries. He's written 6 books on the future of banking and technology. So Banking 2.0, Branch Today, Gone Tomorrow, Banking 3.0, Breaking Banks, Augmented, and Banking 4.0. And they've been released in over 20 countries. Sorry, bestsellers in over 20 countries. His book for Bank 4.0 was awarded top book by a foreign author in Russia for 2019. He was inducted into the FinTech Hall of Fame in 2020. He was voted as America's Bankers Innovator of the Year, voted the world's number one financial services influencer by the Financial Brand, and nominated by Bank Innovation, and this is my favorite one, as one of the top 10 coolest brands in banking. He's spoken in over 50 countries at TED conferences, given keynotes for Wired, TechSource, Singularity Universe, Web Summit, The Economist, IBM, World of Watson, CES, Cybos, and many more. And he's appeared as a commentator on CNN, CNBC, BBC, ABC, Fox, Bloomberg, and the climax of his career, he's now on Talking Success with me. So if you haven't guessed already, Mr. Brett King is with us today, all the way from the United States. Brett, great to have you on. Thanks so much for spending the time. I know you're kind of all over the place, and it's conference season as well globally. And I've just come out of a week at Africa Tech Fest in Cape Town, which has been an interesting time. But listen, thanks for joining. Great. I usually ask the guests to give an intro, but I've just kind of done that for you. But
you've done the intro. Yeah.
What did I miss?
No, I mean, my main claim to fame was, this was a complete surprise to me. You missed one book, actually. The most recent book was called The Rise of Technosocialism, but that's fine. For Augmented, so Augmented came out at the end of 2015, did very well, but on, I think it was like the 8th of January, 4th of January, something like that, early in January of 2018, I woke up one morning, my phone is blowing up, right? Texts and DMs from all over the world. And it turned out that President Xi, in his national address, giving his national address, had my book on his bookshelf. Right. And so the netizens in China were, every year when he has the national address, what's Xi reading? And there was only 2 books on AI, mine and another. So that was pretty cool. The access that Movin, as a startup and the FinTech, initiatives that we've worked on, such as Breaking Banks, and other things, has given me some extraordinary access with central bankers and so forth around the world. But I'm just a tech guy who loves to talk about disruptions, and how that disruption is going to change business and society. And I've just always had the ability to understand those cycles of business and communicate that effectively. And so, like a core part of my career success has really been that ability to communicate complex ideas or complex changes in the system to people who don't otherwise understand that stuff.
So, Brett, usually at the end of my podcasts, I usually ask people to get their crystal balls out and predict the future. But you're a futurist, so we're going to start
I do
there.
that all the time.
Um,
Yeah.
yeah,
Well,
well,
you know,
look, interestingly, when I was obviously doing my research, and I think one of the things that struck me in the recent book is this is not about looking 10, 20, 30 years in the future in terms of the future of banking. This is happening right here, right now,
oh yeah.
across the world. And obviously, I can only talk from an African perspective, but I was hoping you can give us a bit more of a sort of a broader view in terms of what's happening globally. I remember when I was in my very early years in the Boy Scouts, funny enough, and being asked to draw a picture, and this is going back into late 80s, draw a picture of what the world would look like in 2020. And there was flying cars, and there was, everything was kind of up there. It was like the Jetsons.
Well, we have flying cars now. They're just drones that you can sit in, but yeah.
Yeah.
But let me answer the question on the banking and fintech stuff. But I will say that when we look at innovation more broadly, and you look at things like flying cars as an example, it's a good example of some things that we predict a long time in advance, don't necessarily turn out the way we'd expect. Who would have thought we would have had autonomous driving cars before we had flying cars? Because we'd focused so much on flying cars historically, and yet it's probably more likely, in terms of commercial operations, that autonomous cars will be more broadly adopted than flying cars. Flying cars will end up being like a cheaper helicopter for people who can afford it, right? At least, in the medium term. But it's you talk about the crystal ball. This is something I've had to grapple with in terms of speaking to people about the future, is that when I'm talking to you about the future, I'm talking about probable futures based on forecasts. So it's not fortune telling or prediction in the classic sense. It's super forecasting. If you get out beyond 5 years, it's no longer a forecast, it's a super forecast because of the time involved. And the further you go out, then the fuzzier the timelines and everything start to look. But you can make some fairly safe assumptions based on technology adoption life cycles, human behavior historically, and other, macro economic and political effects that are likely to come into play, especially around things like climate change and artificial intelligence. So that's the first part, the prediction forecasting piece. In the banking space in particular, 2005 is when I started to publish forecasts about what was going to happen in the banking sector. And so in 2005, I notably, in a report I did for HSBC, which then became the book Bank 2.0, the red one there, which was my first, bestseller. In 2005, I predicted that internet would overtake the branches in terms of core activity by 2008, and then mobile in 2015. Now, keep in mind, in 2005, we didn't have the iPhone yet. So this was a pretty big bet on mobile when we didn't have smartphones. But it was the next obvious area of technological advancement. And, actually my argument in Bank 2.0 is that mobile's a better device or a better channel for banking than the branch could ever be, because it can be contextual, real time. And so in 2017, mobile wallets overtook plastic cards for the first time. And that's mainly due to the contribution of massive wallet schemes in China, in India, on the African continent and so forth. Yeah. And today, within 18 months or so, 55% of all retail commerce transactions globally will be done through a wallet. 30% through cards and tokenized cards in wallets. So, so the era of the smart bank account is with us. It is a mobile wallet. It's not a plastic card that you get from your bank branch. So that's a big macro shift that's already happened, and most bankers still don't realize it. I say to bankers today, if you're still issuing debit cards or credit cards, you're using 1970s technology in a 21st century world. Right? And the mobile wallet is already surpassed plastic. So that's
So
one example, right?
yeah, can I just unpack that a little bit, Brett, if you don't mind? You also mentioned different markets and different geographies and different continents. When we look at Africa, which is obviously 53, 54 countries, depending on who you're asking, they're all very different, all have very different socioeconomic and different types of maturity when it comes to financial services. Funny enough, when I've been speaking to people in the world of banking here in Africa, cards are still mainstream. Cards are still being printed en masse. Even though in some of the countries, Kenya, here in South Africa, in Nigeria, there's been a huge adoption of mobile money and mobile wallets and what have you. So I think the sort of message is, yes, it's coming, but there needs to be sort of infrastructure layers in place to enable wallets
Sure.
and payment methods and different sort of alternative payment methods. How do you see, because you've traveled the world and you've spoken to people across the world, how do you see sort of in an African context, the market here different to Asia or different to LATAM or different to sort of other parts of the world?
Well, there is some similarities with LATAM, but from a financial inclusion perspective, mobile phones have done more for financial inclusion in Africa than branches ever accomplished. So you take a KCB, in Kenya. Prior to M-Pesa, they had 2 million customers. They were a 120-year-old brand. At most, about 25% of the Kenyan population was banked. With M-Pesa, effectively 98% of the adult population is now banked through mobile money. And KCB, who partnered with M-Pesa, now has 10 million customers through, because M-Pesa sort of superpowered or supercharged that. And, we find people that have M-Pesa, generally speaking, have higher savings and so forth. So that, that's an example in Kenya. We could give you similar numbers out of Nigeria. I can tell you farmers in Kenya, for example, are better, informed about things like commodities prices because of access to a smartphone than the average American farmer, right?
Wow.
So because they use this technology, in sort of innovative ways. So if you look at Africa per se, mobile money is just one piece of it. The fact is, the e-commerce revolution or the dot-com boom that happened in the United States, that never really happened in Africa. And today, what you can see is that the mobile commerce revolution is what's powering, all these startups in Africa, because they're being built off the mobile platform. Smartphones are getting to the point where everyone in Africa will be able to afford them. And with technologies like Starlink and so forth, internet access will be broadly accessible across Africa, fairly, within the next 10 years. So there won't be any digital exclusion for smartphones or internet access. And so that's the main thing you need for mobile wallets to work. And the other aspect of, the problem with cards is cards are dumb. Cards don't give you any feedback that can help you manage your money. Cards only give you two potential states, declined or approved. Right. Yep. And, so you don't know what your balance is. You don't know if the transaction was a good transaction or a bad transaction. Now, if you look at wallets like Apple Pay and Google Wallet and so forth, they try to make the debit card smarter or the credit card smarter by doing categorization and so forth. But what the realization you have when you see that all the fastest growing payment schemes around the world are wallet-based payment schemes, you realize that there is an informational advantage to a wallet. It can help you in, manage money in tactical ways that a plastic card or a traditional bank account could never do. And that's that contextual aspect. And that's only going to get more and more critical. So credit moves from being a credit card to now being contextual credit. So when you walk into a grocery store, if you don't have enough cash in your wallet to pay for your groceries, a solution is presented to you on your smartphone in real time, instead of you having to go to a branch, apply for a credit card and do all of that thing. That's just a technical problem in reducing the friction that we're already working on solving with things like buy now, pay later and so forth. So, there may be a transitional period where cards are still utilized, but there's no role for cards in the 2030s and beyond, because ultimately what was happening with our bank accounts is they're getting smarter and smarter. With AI, as that starts to come into our bank accounts, and you start to need an AI to act with agency, you need much better, much more robust payment rails and identity systems to operate in an autonomous environment than the card allows you to do, even with tokenization. Cards are just not safe enough in that autonomous environment. So, and smart contracts and all of those sorts of things we can talk about in terms of future states. So that, that's the trajectory.
Yeah, no, I completely agree. When we look at the schemes, right, the two main schemes, Visa and MasterCard, historically been a card business, obviously morphed and transformed into, more of a platform service. Do you see there being some competitiveness there? We've obviously got to switch in Nigeria. I know there's a stake from one of the schemes in that. We've got rapid payments coming in play where, essentially it's kind of going on a different rail, certainly here in South Africa with PayShap. Do you see there being some competing in that sort of world as well, or do you think the two main schemes are sort of here to stay and still form a critical part in the payments process?
I work a lot for Visa and MasterCard. I probably scare them too, but they do have a unique opportunity in that they've got incredible network that can be leveraged to push out next generation payment solutions. But it requires them to think very differently about their business in that, they're no longer in the authorization business. They're in the data and identity business, and, that's where their rails could be really interesting utilized. If you start talking about things like smart contracts and so forth, MasterCard and Visa would be obvious, trusted platforms to be parties with that, as with the banks. So there is huge potential for them to make that transition as long as they don't stay married to cards. The longer they stay married to cards and the current interchange model, then the more likely the threat to their system, because all of the fastest growing payment systems in the world that we see have much lower rates of interchange, and they're purely, they're wallet, value store based wallets. Right. Sure. And now, Visa can't move to that because, MasterCard and Visa can't move to that because of their relationship with the banks, but they can, use that as a proxy in terms of the design parameters. But that means, thinking that a customer is not a PAN, it's not a 16-digit number, that a customer, has a robust identity ecosystem, and they have these choices of value stores, and MasterCard and Visa are the gateway for that, rather than the card number being that mechanism. And so I think they'll probably get there. But when we talk about things like, for example, Brazil, PixPay, which is the fastest ever growing payment scheme we've seen in the world emerge over the last few years, where I don't know the latest numbers, but it was up to like 67% of the Brazilian population, were on PixPay, within 18 months. Right now, that's extraordinary, growth and adoption rate. So, MasterCard and Visa would call that an alternative payment method, right? Compared with the banks and with, their schemes. I think that's a mistake for banks to think about wallets like Alipay, WeChat Pay, Momo, M-Pesa and so forth as alternative schemes to the bank, because for most people, they are the banking rails for them. Most people are using mobile money. It's their primary mechanism for that. But the next level of this is, you've got smart glasses coming with augmented reality and things like this. Again, you're not going to take your smart glasses off in a store and tap them on a reader to make a payment. If that's your primary device, you're going to have that automated. If you're using artificial intelligence, you're not going to plug a card number into the AI. That's not necessary. You just tell the AI how to run your wallet and what are the primary value stores you want to use and under what conditions that changes. So, this is the trajectory we're on. And if you look, again, coming back to your earlier question about growth and where the changes are happening, all of the fastest growing financial institutions in the world today are digitally enabled or digital acquirers, right? And so that is from a messaging perspective, it's very, very clear that market share is already being reshaped around the ability to onboard a customer in real time when it comes to all of the basic banking functionalities, whether that's payments, whether that's savings, whether that's access to credit and so forth. So that real time element of that means you must get rid of the card, because the card is just unnecessary friction in that engagement. You end up slowing down onboarding, you slow down acquisition, you increase the cost of acquisition, and in addition to that, you lose some flexibility in terms of interoperability across payment schemes and so forth. So there's no scenario where in 2035 people will en masse will still be using, plastic cards to make payments. That just doesn't, it's like saying that people are still going to use modems instead of, broadband cable, right? It doesn't really make a lot of sense.
No, absolutely. You mentioned about sort of speed of transactions and ease of transactions. And then we open up the world of obviously big and emerging markets when we come to remittance. There's a lot of players now in the remittance space that are looking at using crypto as a utility. So moving funds from one country to another, converting fiat to crypto to fiat, and then off-ramping. What's the general view? And I know this is a broad question, Brett, but what's the general view across the banking sector when it comes to crypto as a utility, not necessarily as an asset class? Is there a view? Obviously, I know we'll delve probably into CBDCs and what have you, but when we're talking to banks, and banks obviously offer remittance services as well, are they innovating? Are they looking at different types of mechanisms to move money from country A to country B, or what's happening there?
Look, there are some pretty interesting developments taking place in this space right now. JP Morgan Chase just announced a whole slew of, token, / crypto types initiatives in terms of cross-border payments and so forth. Yeah. Anyone that's looked at this arena for more than a few minutes understands that if you're talking about smart contracts, which is AI or autonomous business, right, where you have the AI managed components of the business operation, that you can't use fiat currency, because fiat currency doesn't have the rollback and auditability requirements and all of that we need from an interactive digital currency. In an autonomous world, you need the ability to roll back transactions based on agreed parameters and so forth. You need all of the history of that, particular digital coin or whatever as it's gone throughout that process, so you can, audit that back and so forth. By the time we would make the US dollar a digital currency, it's no longer fiat currency, it's now a CBDC, right? So, that's that's sort of really the reality. You can't run smart contracts on fiat currency. So you either have to ban artificial intelligence and not pursue that, or you have to change the currency, right? And China made this, connected the dots on this far sooner than the US, although the US has a problem in that they're the dominant reserve currency, and telescoping that they're going to move towards a central bank digital currency in their mind would weaken the USD, right? Particularly given the fact that China has been trialing and prototyping their CBDC, the yuan, since 2014. Right. So they've got a lot of advanced experience in this respect. But I think in terms of the banks overall, most banks are woefully unprepared for smart economics, smart companies, smart markets that come with AI integration into this world. And so as a result, like even just look at our core systems in banks today. Our core systems have no concept of a smart contract, and you're not going to retrofit a banking core system to do that. You have to have, that's going to have to be in the cloud, at least on a hybrid basis. You're going to have new standards developed for that, particularly for cross-border transactions. And in part, that's why we see a lot more focus today that's come out on wholesale CBDCs and cross-border interactions than retail CBDCs, primarily because if you want to fix smart contracts between two trading partners cross-border, you have to agree on smart contract standards and digital currency standards for the automation to work. So that's sort of, again, that's the trajectory. And, if we project ahead to 2050, the largest economies in the world will be those that are highly autonomous, that have invested a lot in artificial intelligence, robots delivering stuff, drones delivering your pizza, autonomous vehicles, better resource utilization at a city-state level, government made more efficient through the use of AI, et cetera, which would make these economies massively successful and massively wealthy and profitable. So that's really the world of 2050. It's smart economies versus dumb economies. And you can't compete as an economy if you're not doing basic things like smart contracts and, have programmable money to power that.
So 27 years into the future, there's obviously a journey to go on through that. I know there's probably a couple of banks, but certainly one bank in Kenya who are doing some really interesting things, and that's Diamond Trust Bank. I don't know whether you've come across them, but
sure.
They've got, I almost call it a hybrid bank, right? They've been around 90 odd years, traditional, branches, and they've now got this digital transformation journey, but it's not. There's an element of digitizing the consumer, but what they're also doing is building this API layer. So to offer the bank as a service, they've partnered with the South African business called Ukesh, and they're building this model where they're enabling fintechs to come into the bank. They give the regulatory frameworks, they give all the controls and balances, and they're allowing fintechs to innovate on top of the rails of effectively rails or the infrastructure of the bank. But they've got a huge pipeline, very I think easy access into the Kenyan market, which, as you quite rightly mentioned, is dominated by one player in mobile money. Arguably, that's kind of a catalyst for all sort of fintech innovation, certainly on the continent. Do you see other banks in other regions following the same sort of model where they're actually looking and saying, there's a hybrid here. Yes, we've got BAU and we can continue the business as it is, but we need to start looking in the future. We can't just turn one off and turn another one on. So you seeing that sort of gradual shift towards digital transformation? I know that's a term that's been sort of bastardized over the years.
Well,
right?
yeah, I mean, yeah. Well, the first thing that you look for if you're looking for an organization that's really transforming digitally is that the CEO is pushing a changing culture in the bank.
Yeah. And,
honestly, there's very few banks. There's only a handful of banks around the world where you could see this. DBS Bank in Singapore is often quoted as one. I think Jamie Dimon at JP Morgan Chase is an example of that. There are a few other examples around the world where you see CEOs now trying to, like CM Commercial Bank in Thailand is a great story of the CEO back in 2019. Who sat the staff down and said, we're becoming a digital bank. And I know this transition is going to be challenging and awkward for many of you. If you're uncomfortable with this, so if you are ready to be on board with this as an employee and you're worried about losing your job at the branch as we go more digital and so forth, don't worry about that. We'll retrain you in data science or AI or whatever makes sense so that you have the skills to, still be of value with the bank. For those of you that are uncomfortable with this level of change and you're questioning the direction of the bank, we'll help you find a job outside of the bank. And that's the sort of cultural change that you need. It's not really about technology. There's plenty of technology. In terms of fintech partnerships and associations, again, if you look at feature set, if you look at design patterns, all of the leading feature set and design patterns in terms of new types of application of financial services utility in the app and so forth has come out of pure play digital players. Neobanks, the wallet ecosystems, buy now, pay later players and so forth. This is where the innovation in financial services is occurring. So if you want the fastest and the cheapest innovation as a bank, your best way is to partner with fintechs. They're going to be able to do it 5 times cheaper and 10 times faster than you'll be able to do it internally because of the processes, policy, and stuff like that you have. But that requires very forward-looking culture because otherwise, I'll give you an example. We're working with a North American bank when we started doing Move-In as banking as a service. And it took us about 4 months to build all of the tech for this bank that we partnered with. It took us 9 months to get through procurement. Right.
Yeah.
And that's a typical problem for a fintech trying to work with a bank, is that the bank treats you like Oracle or IBM from a contracting perspective, instead of a small 20-man team that, has $1 million of cash and 3 months of runway. Right. And so, that requires a much more flexible way of working. So this is the cultural elements that you really need to see for banks to be successful at this. Having said that, there's a massive opportunity for platformification of the bank, as you're talking about with Diamond Trust. Starling is doing an excellent example of this in the UK with, they have their new banking as a service, platform, which they call the Engine by Starling, and they've brought in lots of bespoke fintech players into that ecosystem. There's a crowd that I'm associated with in the US called Alloy Labs, and that's a bunch of community banks and credit unions who share the cost of infrastructure development across different institutions. So sort of a shared innovation lab concept, and bring in fintechs into that space. So there are models for it. I don't see many banks who have, for example, just even a fintech partnership development team that can help fintechs come into the ecosystem of the bank and streamline all of the contracting, stuff and the business stuff, so that you can get to the execution. That's sort of one of the first things I look for.
So you mentioned a few minutes ago about, we look to the future and we look at making predictions. Then you mentioned super predictions. And then we started talking about, in the year 2050. I don't want to ruin banking 5.0 or 6.0 or 10.0 for you, Brett, right? But if we do look into the future, do you see there being a point where, almost like what's happened with OpenAI over the last 12 months, right? There was this launch of OpenAI. Everyone started building all of these kind of faces to all these windows into OpenAI. And then OpenAI last week went, you know what? Just here you go. Here's the platform. We've opened it up. You can build your own bots, and it's probably knocked a fair few business ideas or business concepts out there. Do you see banks actually becoming or needing fintech, right? Or will they become fintechs themselves? Because obviously, you look at boardroom directors at the moment in banks. They still have an older way of looking, and they're probably more conservative. But if we're looking in 27 years' time, there's a new leadership teams. There's people that have been digitally native. They're coming into banks, into these board roles, going, hang on a minute, we know what happens. We know what people want. We know we've seen this digital transformation journey. Is there going to be a need for fintechs? Or do you think banks are going to turn into what Visa and MasterCard are turning into, which is effectively tech companies, and providing these as service layers and just building sort of consumer or business-facing apps in their environment?
And any bank who isn't a technology company in 2050 likely won't exist. The banks as we think of it today, in terms of what we think of a bank, won't exist. And I'll tell you why. Right, there's almost nothing that you can do in banking today that won't be affected by automation. 2 of the top 4 jobs that are likely to be affected by artificial intelligence are in banking, right? Credit risk assessors, credit agents, and bank tellers, right? Mm-hmm. They are the 2 of the top 4 jobs that will be disrupted by banking. Sure. But here's the thing, is that in 2050, the largest banks will be a collection of algorithms. So what would JP Morgan Chase look like in 2050? Today they have 180,000 employees across the world. Yep. It may be 2,000 or 3,000 employees and a bunch of algorithms. So this is a dramatically different view of what a bank is. A bank isn't a building. It's not a core system. A bank is a set of, autonomous algorithms operating in sync to manage money. How do you license a bank under that condition? Capital adequacy requirements and all of those sort of things becomes secondary or subsidiary to managing the algorithm. So how you would license a bank in the future is you license them as a technology company based on the technology and algorithms that they have internally. None of the traditional banking expertise that makes banks safe in the 1980s and 1990s view of the world have no relevance in this highly autonomous world of 2050. So if you're a bank that tries to keep doing banking the traditional way, you just get pushed out because, again, you can no longer be pipes in an autonomous world with those traditional rails. Now, some people say, but you know what? We have the internet now, and people still read newspapers, and they still, they still might pick up a landline phone and use that in the office. So maybe, some of that will survive. And you know what? I'm sure there'll be pockets of survival of some of this old methodology, but the biggest banks in the world will be AI and technology based. I mean, that's fairly obvious. We can see that just even from the growth of tech giants, with social media and, smart devices and so forth.
Yeah.
So this means that regulators have to change. Regulators have to become technology companies, right? Or technology functions of the economy.
Mm-hmm.
The way we license banks becomes very different. And so the difference between a fintech and a bank really won't exist in the 2050s because it'll just be part of the technology ecosystem. And the banks that want to survive in the meantime, they need to play in this ecosystem, recognizing that the biggest shift in banking is a shift from bank products to real-time embedded banking experiences. And that means that the function of the bank is to push the utility of the bank to the customer when and where they need it, rather than waiting for the customer to come and ask the bank for a product. And that's the biggest shift. And that requires a very open architecture. It requires you collaborating with tech giants, with fintechs, with AI companies, with data brokers, etc. That's the sort of architecture and openness in terms of culture and platform that you need. And even when you look at the fintechs today, the reason they have advantages in terms of these types of ecosystems is they don't. You don't hear, the CEO of Monzo or Revolut or, Chime talk about their core system. They talk about their tech stack.
Yep.
Right. That's how they view the technology that enables them to do this stuff. Whereas often within traditional banking, the core system becomes an excuse for things that you can't do, quickly or rapidly. And so that's all part of the same answer to the same problem, is that, you have to be much more integrated technologically with a whole wide range of partners to deliver banking in real time. And to do that, you have to understand that the customer no longer comes to the bank in this world of the future, that the bank is with them when and where they need it. And that is again, a massive cultural shift for many banks who still feel like, you come to us, you fill out this application form. If you're not too risky, we might let you be our customer.
Yeah. You talk about technology. In your book, you talk about super apps. You also sort of mentioned a few of the, I don't know if they're called FANGs anymore because they changed their names. MANGs, I don't know what they're called. Right? So, you've got the Googles and the Apples and what have you. A couple of weeks ago, I had Miriam Kasim, who is the CEO of Vodacom, Digital Financial Services. And we literally spoke an hour about super apps, where she sees super apps coming from, and maybe it's different in other parts of the world. Maybe there's a bit of bias there given who she works for, but and her job. But telcos, there's a big sort of argument to say, actually, in emerging markets, certainly on the continent here in Africa, that actually telcos could win that sort of race for the super app. Whereas in more developed markets, you may be looking at a Google or a Facebook, Meta, or an Apple or whoever it may be. What's your view on that? Do you see different markets actually having sort of different winners in that space?
I think there's a big paradigm shift coming here. And if you understand how AI is going to change your daily experience with technology, and this is going to take, probably 10 years, but think about this is in less time than we've had the iPhone, for example.
Yep.
This sort of change is going to happen. Is the next paradigm is no app. right? The next paradigm is chunks of functionality or chunks of experience sort of built into this real-time layer, whether it's voice AI, through your smart speaker or through your headphones, or whether it's in your head-up display with your, augmented reality glasses, or, continuing, sort of optimized experience in the smartphone. That the we won't need app ecosystems. You'll just talk to your AI, and I'll say, I need to send Darren, £50. Can you do that, please? Right? I'm not having to go into an app, identify you out of the contact list. I just get a confirmation from AI. Are you talking about this, Darren? And we're done. So start thinking about all of those interactions you do in the app today. Things like paying bills, transferring money, and those types of things. And, why would you need an app in an ecosystem where you can just tell your AI what to do, and it can do that for you as an agent on your behalf? And so then what you need to start doing is saying the content or the interactions that you're going to have from an interface perspective, it could be spread across multiple sort of types of interactions. Like it could be voice-based or multiple modalities. It could be voice-based. It could be, you could be gesture-based, the smart glasses, and so forth. So now you have to start thinking about design of experiences in terms of those behaviors or contexts that present. So instead of stop what you're doing, open your phone, turn on the app, I'm now trying to, again, remove that friction and just get you to the solution that you want as quickly as possible. So for example, I mentioned the grocery store interaction in the future. Yep. Or, let's say a mortgage interaction, because we're using banking examples. If you want other industries, we can do it. But, you walk into a grocery store, you've got your smart glasses on. This is not the current generation, but in 5-7 years, you walk into the grocery store, you get a notification on your head-up display. You normally spend $600 when you come to Carrefour, or $400. It looks like you only got $200 in your wallet today. Do you need some credit to complete your grocery shopping? And the fee for that is, $5, whatever. Yep. So you just gesture, all right, that's great, let's do that, right? And bang, the problem solved. So instead of you having to go into an app, apply for credit, all of those sorts of things, it's just the most streamlined version of that. So when you start applying that to Uber, food ordering, retail commerce, there's going to be, if you want to buy a new shirt, you're going to have an interface that then says, give me the parameters. What sort of shirt are you looking for? And then it gives you a selection. Do these work for you? Yeah, sure. Let's do that one. But for a lot of other stuff, it's just going to be able to execute. Order me a pizza. You know what I really like from, this pizza place. Just order it for me, So you're not having to have the super app, interaction that, as we classify it today. The super app is more about your personalized AI and how that's trained and so forth. That may be driven by those operating systems, the OS in the smart glasses, the OS on the smartphone, whichever form of personalized AI you use. There's no reason it couldn't be open AI based, not open AI, but open source based. It could be OpenAI based as well, but but that's I don't sort of think the app paradigm survives beyond, I don't know, maybe the late 2030s. But this is just like when the app world came along, it's a new boom. These AI and personal AI type modalities. I do think there's opportunities for tons of new startups to emerge in this area as well. And there may be some crossover in the meantime, sort of between super apps becoming the platform of these personal AIs, certainly. But I think, we've got to lose the app concept moving forward. It's more about chunks of experiences embedded in your world.
Which is interesting. I was on a moderated panel yesterday. We were talking about social commerce, and how that's kind of taken off in certainly in this part of the world. Whether that be through scrolling through TikTok and going, actually, I want to buy that, or Instagram going, I want to buy that, or I want to subscribe to that, or try that SaaS product, or whatever it may be. You just think that there needs to be some sort of infrastructure layer, because a lot of what you've just spoken about, I completely get, but it's It's deliberate. Okay, I want to order a pizza. I want to pay for this. I want to get credit. I want to go into a shop. But there needs to be another layer there where advertisers and businesses are promoting services and products to you. If it's all very much you're in control, which I'm not adverse to by any, I get driven mad by bloody adverts, right? But if you want to be, if you're saying the consumer's in complete control over what they're doing, where is that sort of source of new products, new ideas, new things to buy, new offers? I mean, if you're wearing smart glasses and you've got things popping up as you're driving, there's Burger King here offering 2 for 1. I mean, you
Right.
be car accident after car accident,
So,
unless you're in an autonomous vehicle.
No. There are definitely scenarios or opportunities for that. For example, you might tell your AI, look, if there's a really good offer that a merchant wants to offer me because I'm a good customer, then put that up to me, but do it contextually. So, for example, you might wake up in the morning, and your smartphone might say, hey, we recognize you love coffee. There's this new coffee shop, and we're giving you a free coffee as, a valuable customer of Starbucks historically or whatever. We'd like to see if you like our coffee, as an example. What we do know from Gen Zs is that, and again, this is sort of the digital shift, is they're looking for in-app rewards right now. They're looking for contextual rewards. They're not looking at airline miles and cash back as a motivation for them using a particular payment method, right? That's just not going to work on them. The rewards need to be contextual to them. I don't want to see an ad for nappies if I'm, a grandparent, I don't want to see, an ad for retirement plans if I'm a Gen Z, it's has to be, in this world, has to be much more tightly focused. So merchants are going to have to start, getting into these schemes or into these platforms that really can match their products and services to the needs of their customers from a behavioral perspective, rather than just be a sort of blanket branding and sort of shotgun approach. And hey, if we get 1% conversion, we're doing good, right? It has to be much more highly targeted. And, we've seen that with social media targeting and other things like that already. People joke about Facebook is listening to your phone all the time, and then you get these offers popping up. We are seeing a definite shift towards more personalization of that. But that's the basic method, is if you're an advertiser in the space, you have to be prepared to give value in real time, rather than just thinking that a deal or an offer is going to get someone to respond. It has to be much more contextual.
I'm sitting here with a smile on my face, because if I wasn't enthusiastic about fintech in the future then, before like 40 minutes ago, I certainly am now, Brett. So really looking forward to this. Before we wrap up, obviously we've got listeners from across the world, but certainly across Africa. People want to get hold of your latest book or any of your books in your series. Where can they go? Amazon? Or where's the best place to look for?
Sure. You can go to brettking.com, which is my personal website. You can also go, you can go to my LinkedIn page. I'm on all the social platforms, Insta, TikTok, etc. Check out breakingbanks.com and also thefuturist.com, which are the two number one in category podcasts that we produce. So The Futurist is number one in futurist category, Breaking Banks number one in FinTech. And I am working on a new book for new year, which is called Branch Today, Gone Tomorrow. It's version 2 of that book, but it looks at all of the branch activity around the world and how that's changed since the pandemic, and looks at what that means for the design of banks moving forward if they still have branch networks. So that's something you should keep an eye out for. But the current book is The Rise of Technosocialism. So if you go to technosocialism.com and you want to find out what the politics and economics of the world of 2050 look like, then that'll help you understand.
Right, for anyone listening or watching, I will put the links sort of below here. If you're listening on Spotify or Apple or Google, which is now on YouTube, there will be links in the description. So feel free to click away and give Brett a follow on LinkedIn as well. He's also got a sort of a PR agency as well, which I've been following quite heavily on Instagram over the last couple of years as well. Some very, very
well, we have a speaker agency called Provoke Management, and that's where we have a bunch of futurists and fintech speakers in the space, guys like Jim Maroos and Ross Dawson, Rob Tursek, and others. So really pretty cool group of people. And the futurist, we're building an amazing network for the futurists. So
Well, listen, lots to look forward to. Brett, thank you so much for your time. I know it's in the States and you've only had 2 cups of coffee, so you're probably gasping for a third. I'm going to let you get on. Thank you again for joining us. Thanks to your team for facilitating this and setting this up. And we'll see you in the future. Thanks, Brett.
That's a good tagline, man.
It's not bad, is it? I thought of that on the fly as well.